Good morning, everybody, and welcome back to Morning Markets on Thursday, the 16th of July. A couple of things that I wanted to touch on this morning, and it builds on the number of economic releases that we've been getting over the week so far and will continue to get over the today and tomorrow. I wanted to focus in on China first, where we saw earlier in the week export and import data that gave us a picture on the health there of, I suppose, trade. And then today there's been a number of other data releases that give us further insight into how the Chinese economy is recovering. GDP, industrial production and retail sales. So firstly, looking at GDP, what did we get there? Well, we got a GDP number that was positive and showed that in the second quarter of 2020 the Chinese economy grew 3.2% year on year. So a recovery from the negative performance that we saw, and the first negative performance for many years that we saw in the first quarter. That takes the first half number such that the Chinese economy has declined slightly over 1.5% on a year-on-year basis. So recovery there, and relatively broad-based when we look at the underlying data inputs from the statistics. I think then if we look at industrial production, again, the positive trend that we saw in the past two months, we saw industrial production increase 4.8%, positive there. Looking at retail sales, and this is where I think there's the mixed picture and something that is quite instructive for us to potentially think about the recovery that we might see in retail sales and consumption habits in other economies as they reopen and recover post the lockdowns from COVID-19. What did we see there? We continue to see that incremental month-on-month improvement. However, retail sales still remain negative on a year-on-year basis, so falling 1.8% for the month of June. And that takes retail sales for the first half of 20 down 11% or slightly over 11% year-on-year. So that just to me gives us something to think about as other economies reopen, and just the speed of improvement that is expected, and whether that will come through as economists think. Something that the Chinese evidence suggests we don't see that rebound as quickly as expected in consumption habits. Turning then to other things that are happening in the background at the moment, and we've got the ECB meeting today, and we've also got the EU leaders meeting today and tomorrow, where they will be discussing the recovery fund. And I think not much is expected from the ECB given the action that's already been taken. They may make some commentary around their assessment of the effectiveness of some of those measures, but no policy change is expected. The EU leaders meeting, I think, is clearly important and something that markets are focusing on, just to see what is discussed and what some of the side discussions are there about the challenges of putting forward and moving forward with the recovery fund. We've already seen European assets react positively over the past number of weeks and months, and indeed the euro relative to the dollar continues to trade very strongly. So that's something to continue to monitor. If that can see a conclusion and a positive conclusion to these discussions, I think we'd be expecting European assets to perform better in that scenario as well. This morning we'd also UK employment data, and what did we see there? Well, we see an employment picture that looks to have not changed that much from previous months, with the unemployment rate at about 3.9%. I think we can take this one of two ways. I suppose that either the economy is in a better position than we feel it is, or the statistics are being skewed by the furlough programme. And I think from my perspective, I probably am in that latter camp, and that, as has been indicated by a number of others, as the furlough scheme wanes and changes over the coming number of months, there will be an impact on employment trends. So that's something for us to watch over the coming months as to how that continues to evolve. Touched yesterday on some of the US bank results. We had another US bank reporting yesterday, Goldman Sachs, again illustrating some of the similar trends to peers. Strong trading business within their investment bank, and then ongoing provisioning against losses associated with some of the loans, particularly those loans that they've made into the energy sector. So in general, yesterday asset markets performed okay. We saw equity markets across the globe move up. We saw positive performances in the corporate bond area. And then in the sovereign markets, we saw little change. So yields on 10 years primarily unmoved over the course of the day. Later today, we also get US weekly employment data points. That'll be an interesting thing just to observe, to see if there has been any impact on the recovery in employment from the rising COVID-19 case counts that we've seen over the past number of weeks. That's it for today. Please join me again tomorrow. Many thanks.